let's continue to go to work and make the ancestors and the Creator proud. Now, family members and listeners alike, I want to go over a very, very clever way to get P.A.I.D. from the airline industry. You see, we must see now what others see eventually. We must continue to develop our third eye and our third ear, where we can look at and through things. We can hear the inaudible. We can listen and not merely hear. All the things that the ancestors and the Creator are presenting to us, such that we can monetize these things and obtain and maintain our economic liberation. Please take copious notes. Now, despite nosebleed valuations and mounting political risk, a dangerous mix of cockiness and complacency continues to drive equities higher. Now, don't pat yourself on the back for escaping a crash. Take proactive measures, as we see now what others see eventually, and do it now before the broader market falls back to earth. Now, portfolios, hedges sometimes come in unlikely forms. And I am going to pinpoint a stock that's a defensive growth trifecta. The stock confers outside growth potential, protection against a downturn, and even a hedge against inflation. Now, chances are you've never, ever heard of this particular company. It's in the aviation sector, and it's on course to continue its market-beating ways. Now, in just a minute, I'll examine its prospects in greater detail. But first, for rational context about today's risk, I turn to former Federal Reserve Chairman Ben Bernanke. Recently at a 3-day hedge fund conference, which was just last week in Las Vegas, Ben Bernanke asserted that, quote, "It always puzzles me how financial markets have long shown a tendency to be blasé about political risk until the last moment," end quote. Now, to be sure, our investment strategists here at the Atwwi Wealth Institute have consistently made it clear that the Trump rally has been based more on exaggerated hopes than actual fundamentals. But the recent spike in the CBO's volatility index, known as the VIX, which we talked about in our last Atwwi Wealth Institute Tier 1 and Tier 2 classes, okay, and the VIX also is known as the Fear Index, and it is one of our MAG 7/17 positions, okay? The recent spike in the CBOE's volatility index, aka VIX, indicates that Wall Street is finally losing faith in the embattled president's ability to deliver on his promises. Now, if one's expectations for a stock market correction later this year proves correct, then you will be hearing a lot more about the VIX in the months to come. But by the time the VIX has spiked enough in value to indicate the fear of a correction is indeed near, it may be too late to do much about it. So, one would be wise to pay attention to the VIX, but don't let it determine when to take protective action. Now, one protective action is to consider high quality positions in booming aerospace and defense arenas. Now, I would like to take this opportunity at this time to spotlight a hybrid aviation position with a global presence in both the commercial and military sectors. It is also a technology play. Now, I understand a thing or two about aviation. So believe me, when I tell you that the following stock is one of the best growth stories around, okay, you best believe it. Now, the company's name, believe it or not, is AAR. Letter AAR. It trades under the symbol AIR. Okay? Trades under the symbol AIR. Now, this company is a provider of maintenance, repair, and overhaul, which goes under the acronym MRO. So that's maintenance, repair, and overhaul, to operators and manufacturers of rotorcraft and fixed-wing airplanes. Now, aerospace is booming, but many of the industry's well-known names offer limited upside. But AAR, on the other hand, is set for the sort of market-thumping gains that his more famous peers would envy. You see, AAR stock has been on a tear, and the company's earnings growth projections are indeed exceptional. And yet, the company scarcely gets a mention on CNBC or Bloomberg. and the other television noise machines also seem to forget about AAR. Now, mechanics in dirty overalls are perhaps considered too boring a topic, but it's these boring wrench turners on the ground who keep aircraft in the air. Now, AAR is headquartered in a place called Wooddale, Illinois. And AAR boasts a vast global footprint and ranks as the biggest independent MRO. Okay, what is MRO? Maintenance, repair, and overhaul operator. Okay, in the United States by annual man hours generated. Now, with a market cap of $1.1 billion, AAR is the largest publicly traded direct play on MRO growth. However, it's still small enough to offer greater capital appreciation potential than the gigantic aerospace companies on its client's roster. You see, AAR is something of a rarity. Most major OEMs and airlines have created in-house MRO shops, but AAR is an independent MRO that combines the technology innovations that it has and nimbleness of a small cap company with sufficient economies of scale to keep down its cost. Now, AAR enjoys tailwinds from aerospace growth in the commercial, business, and military sectors. Now, the company operates in two segments. Listen to me closely. Aviation services and expedited services. Now, the aviation services segment offers aftermarket support, inventory management, and distribution services. The expedited services segment provides products and services supporting the movement of equipment and personnel by the U.S. Department of Defense, foreign governments, and non-governmental organizations. Now, demand for MRO is particularly strong these days as air travel enjoys one of its greatest upswings since the end of World War II. Now, the global economic recovery is prompting consumers to open their wallets for plane tickets, and airlines are dipping into their coffers to make long-deferred repairs and upgrades. At the same time, a huge surge in global military spending should benefit AAR. You see, the company's major clients include Boeing, the world's largest maker of commercial airliners and military planes, and domestic as well as international airlines. And if you remember, Boeing is one of our Asset Wealth Institute defense positions. Hint, hint. Now, as stocks in highly cyclical sectors gyrate according to the latest economic data or political crisis, AAR is a steady Eddie performer. The equation is simple. It is, without this company's services, aircraft just simply can't fly, period. And while Trump is increasingly unlikely to deliver on healthcare and tax reform, he already has delivered the goods on a bigger defense budget. Now, defense spending remains massive, and it's on a long-term upward trajectory, which shields companies such as AAR family from temporary economic downturns and market setbacks. Consistently high Pentagon spending also provides insurance against inflation, which after a long period of dormancy has been rattling its cage once again. The average analyst has an expectation that AAR's year-over-year earnings growth will reach 30.3% in the current quarter, 20.7% next quarter, and 29.2% in the current year, and 26.7% next year. And there are even other analysts who call for projections for AAR to rack up 5-year earnings growth of at least 18% on an annualized basis. Family members and listeners alike, AAR stock has soared about 44% over the past 12 months, compared to about 16% for the S&P 500. However, with a trailing 12-month P.E. of 24, the stock's valuation is roughly in line with its peers. What's more, there's a significant upside left to AAR, driven by its strong earnings potential. Family members, a very, very clever way to get paid from the aviation arena, buying through a MRO. We're talking about AAR, which trades under the symbol AIR. And remember, no airplanes fly unless they have maintenance, repair, and overhaul.